Hello, everyone. Thanks for attending. Welcome to another episode of Real Estate Investing, Real Estate Information. My name is Siwin Yi, from the Year Real Estate Network, and my co-host is for the third time. I invited him to do a video. Is Mr. Tony Bruno from Coldwell Banker. He's a local realtor here in the San Francisco Bay Area. Specifically, he's physically out of Fremont, which is on the East Bay of the Bay Area. And but he covered Tony Bruno. You're a licensed local realtor. You've been doing it for more than 4 decades of selling and buying homes in the local area. And
Yes, I have.
do you cover what area of the Bay Area? You
Alameda County, San Jose, San Mateo counties, and sometimes I go even further depending where my buyers or sellers want me to go.
Okay, good. You cover a very good wide range. So Tony, this is a great timing for me to invite you to talk about Bay Area real estate. And first of all, even before the we're seeing recently the beginning of the high tech layoffs from major iconic high tech companies. Even before that, we have seen some correction in California real estate and specifically in the San Francisco Bay Area real estate. So I've seen like anywhere from 5 to 10% reduction of prices in this past year. I know the real estate is very local, down to the neighborhood, down to the house, down to the city. But I want you to, from at this time, paint a big picture. So yes, we're going through a correction in San Francisco Bay Area real estate. So share with the audience what are your thoughts about the correction, and then I want you to give us some thoughts about the beginning of the high tech layoffs, and is it a big deal, or is it a it'll blow away, shouldn't be a major problem, and then we're gonna finish up on our short video with some of your cases of some of the buyers and sellers you're working on some of your clients, and also and then finally your takeaway about the future of San Francisco housing market. So buyer, primary homeowners and sellers, they can make an informed decision. So the way you do it, you're very, very blunt. You are you talk real. You are on the ground doing the transaction. So that's important than other people ramble on about giving misleading information about real estate. So without further ado, Tony Bruno, take it away. What is going on? Yeah.
Thanks so much, C-Wing. What is going on? Again, I've been doing this 34, 35 years, and nobody can time a market. But if I look back to when we started to see the slowdown, they started talking about raising interest rates, actually even late last year. And then when they started hitting those increases, January, February, we're still okay. March, April, it was like, oh my gosh, buyers started to say, hey, they've gone up. I either got to get into it now or just wait it out. I think, in my opinion, April and May, that was the peak of the market in the Bay Area. And now if you look at where we're at today, from January to today, interest rates have doubled from, below 3 to actually close to 6 and 7. We had a bit of a softening in the rates last week. Hopefully it continues, but who knows? I mean, the Fed's talking about another increase in December. That may push rates again. I just don't know. But so we started seeing some slowdown, but homes are still selling if they've done two things. They've priced it correctly and the condition is good. Those homes are still selling.
Yeah.
So right now, the people that we are working with, they have two choices. They can make the repairs, or they have to price it really low, really well below their expectations. But in this marketplace right now, even if you're throwing money into it, into renovating, if you put $100,000 into it and it's a declining asset, maybe you want to keep your money in the bank and price it from the bottom up and see where it goes.
I see. Yeah, that's a very good point. So, so let's break down into price ranges. I know the median price of a burial home, depends depending on what county, but let's say, yeah, you service the Fremont, the East Bay, and Liberty San Jose. The median price is most likely like 1.8 million, or maybe even $2 million. So can you break down just a little bit from a high level what price homes are selling the most, and what price homes are having some lot of price reductions?
There's always buyers in that entry level price point. There's always buyers in that. Again, entry level in Fremont is now over $1 million. If you see anything priced below $1 million, they may still see multiple offers. But again, based on my years of doing this, the numbers just are mind-boggling where we're at today. Even with them rolling back a little bit, they're still really, really high. Do I think they're going to come down much more? I do think we're going to see more of a correction. You mentioned earlier 5 to 10%. I'm certainly seeing that at this point in time, and I do think we're going to see further. But I think it's going to be a soft landing. I think what's going to keep us kind of firm in our pricing is we still have very limited inventory. And again, I do work a large area, but I'm going to just use Fremont as an example. Fremont's got a population of about 250,000 people, and right now, if you look at single-family homes, there's less than 100 on the market right now. I think there's 97, which is really limited inventory. And as we get closer to the holidays, it's going to diminish even further. So I think going into the new year, we're going to probably have 50 homes or fewer on the market at that point in time. And my suggestion to sellers, they say, should we wait till after the first of the year? It's like, that's what everybody does. If the house is vacant, it just makes sense to put it on the market now before the market deteriorates any further. That's my opinion. If you're living in a house, nobody wants to have their house on the market in the holidays, and I would suggest waiting until January, February. But I do think we're going to see softening in prices into the new year and beyond.
Yeah. So what I hear you saying, Tony, is that so the data and the trends that from various media resources such as Redfin and Realtor.com, they clearly show some price reduction in many areas of the country, but in particular in California real estate. So can you give me an example of maybe one case of your client that they put their house maybe a few months ago listed at whatever price, and the actual sales price is lower than what they asked for? Can you give me just one quick example?
Well, I'll give you a property in Sundale. We actually met with this seller the first week of February, and we did a market analysis, and back then we were looking at 175 to 1.8. Beautiful home, really nicely done. Unfortunately, life happens. They had a lot of things going on. They did not call us to put their home on the market until late August, early September. We went back with the new market analysis, and it showed about 1.5 on a really good day, and they weren't quite ready to accept that. So we sort of split the difference at $1,650,000. Well, 30 days into it, we reduced it to $1,600,000. Still nothing. Actually, we did have an offer on it early on. Within the first couple of days it was on the market, offered him at $1.3 million, which I thought was, for the quality of the home, was insultingly low. So they rejected that offer. But then fast forward, they finally got to the point. It's like, we want to get this done. Where do we need it to be at? And I said, we need to be at 1.5 now. So we dropped it to $1,499,000. And within a week, we generated 3 offers. We had a multiple offer situation, and they were hoping for over the listed price, but they did not get that. Actually, we closed last Tuesday for $1,455,000. They did get 3 weeks free rent, but all the other offers that came in were below that, and they wanted rent at buyer's new PITI, which can be about $7,000, $8,000 a month. And we just don't want to deal with that. So they did take an offer. It was a top offer dollar-wise, plus with that free rent, made it a lot more appealing. When they signed the offer, they were kind of kicking themselves, but now that they've closed escrow, they went out and purchased their new home. They got a price reduction on that, so they're extremely happy that they made the decision to get to the price point where it would sell.
Yeah, so they move up to upgrade a home, but they have to pay the higher interest rate. So, right. So how
Well,
do you feel
they're in a
about that?
position where they're in their home since 1984. Actually, before I was in the business, these are friends of mine from high school. So they're longtime Fremont. They're Fremont natives like myself, and now they're moving to go up to where their kids are living, and they're moving to an area outside of Sacramento that's kind of a pricey neighborhood, El Dorado Hills. But they were able to sell their home in Fremont. They had enough cash from that to purchase their next home cash. No worry about financing, interest rates rising. So they're now just their property tax bill and their insurance, and they're going to be living a good life with their kids and grandkids.
Oh yeah, I know where El Dorado Hill is located. I drove past there a number of times over the years. Yeah, that's right. A lot of people moving to the Central Valley,
Yeah.
Sacramento area. So in their unique situation, they felt okay about it, even though their homes sold for a lot less than asking. But the fact that they live at their home for so long in Fremont that they have built up so much equity, so it's not an issue for them. So this is a case of a good situation. Uh, Not many people are in that situation. All right, so that's good. So now with the recent, the layoff, the high tech layoff, Facebook and Apple and Twitter, all this, the news media, they report this high tech layoffs recently. So with that in mind, from your perspective, how is going to affect Bay Area housing with this impending doom and gloom situation?
Well, I'm still hearing positive things in the job market, even though we're having these layoffs. There's still a lot of companies are looking for qualified employees. I mean, if we do see the unemployment rate spike, that's certainly going to cause concern. Again, I'm scratching my bald head. I don't understand why Elon Musk, who has so many things going on, would take on Twitter and then basically the company implodes. $44 billion purchase, mind-boggling, and lays off half of his staff or more. I don't understand that. But again, the one thing I do like about what he is doing, he wants his employees in the office 100% of the time. My concern has been since the pandemic, if these companies allow their employees to stay at home, they don't need these high-priced campuses, and that's going to just implode our market. So I'm hoping that all of these distant employees, not to be forced to go back, but if you want a job, you got to come back to the office and earn your salary. Not that they're not earning it working from home, but my opinion, if everyone doesn't go back to their places of employment, the physical location, I think we can see a real downturn in the Bay Area real estate market. It might not recover from. Just
Wow.
my
Yeah, that's very interesting. Very interesting. So you think the high tech layoffs are going to continue, or this is just a one-time anomaly? Uh,
Well, I think a lot of people are afraid to go out and make major purchases. They don't want to go out and buy the new TVs, the new computers, and that's going to have an impact on tech. They wanted to raise the mortgage rates. Now people are just sitting on the sidelines and they don't buy anything until they have to buy it. So I think we're going to be in for interesting times. But again, doing this, like you said, 4 decades, we always wind up on our feet, back better where we were before. So during this time, if you have to sell your home, wherever you're going to go, you're going to pick it up on the other end anyway. And if you have to buy, provided you're going to be in your home for 10 to 20 years, doesn't matter what you pay for it today. 20 years from now, it's going to be worth double what you paid for it. Just my opinion.
Yeah, I agree. I agree with you. It's a lot of people. They pick on California real estate over the years, and you have a lot of people that for political reasons or for whatever reason, a lot of Californians they dish on California. Emotionally they want California housing market to crash, so they could come in and buy the bargains. But again, you and I in real estate business for so long, and I lived in the Bay Area for 34 years, and I still live here in the Bay Area. But I do real estate investing only, and even though I'm a licensed California mortgage a licensed broker, but I do out of state, as you know. But so because of low, again, it's all about economics 101. Yes, California is a cyclical market. Over the years, it goes up for a long, long time, then it comes down through correction. And I'm not surprised. You're not surprised that the prices have dropped 10 to 15%, sometimes more, depending on the neighborhood in the Bay Area. But I wouldn't call it a crash because of the perceived low inventory and the homeowners right now across the United States, they have so much equity in their homes still. They have most of them have a lock in a very low interest rate. So most of them, they're not going to put their house on sale, given that the interest rate is 7%. So lack of new listings, lack of pending sales transaction, very, very low inventory. So what is your crystal ball? If no one have a crystal ball.
Well, I think like you mentioned, these people that purchased their homes 2 years ago, not even 2 years ago, a year ago, and they were getting below 3%, for them to jump up to upgrade their home, the home's going to cost more. The interest rates have doubled what they have. I think they're going to be staying put in their homes for many years just because economically they can't afford to move unless they leave the area. So I think we're going to see limited inventory. I think it's going to continue. Again, you have some sellers don't want to sell. They don't want to sell for less than their neighbors did last year. So I think they're going to hold tight. And the younger folks that just bought recently aren't going to be able to move. Previously we had, if the buyer wanted to move up, their sticker shock was not so much interest rates, but the property tax bill going up quite a bit. So that was holding them back. So I think now it's going to be interest rates. I think we're going to be seeing these interest rates stick around for a while. Makes me nervous personally to hear a young couple, we're going to buy it and we're just going to refinance it when the rates go down. Well, the rates will go down, but if the values don't hold, you're going to have a really hard time refinancing your home. So it's kind of a quandary right now. But again, if you buy based on the long term, you can afford your monthly payment when you buy the house, you're good. You're good. If you stretch yourself, that's not the great thing to do in this market.
Yep, I would agree with you. So in terms of new buyers coming into the Bay Area housing market, what type of demographics or the people that have the motivation to buy right now that can afford it, they want to stay long term, even with a higher interest rate. So based on your personal experience this past year, what types of buyers are still buying homes in the San Francisco Bay Area in this particular market?
Well, early on this year, starting late last year, we had several buyers that wanted to upgrade their home. So they sold their existing home, they moved into larger homes. Again, I don't think we're going to see that as much. We are working with some buyers who were priced out of the market. They still have the ability to buy. With the interest rates, they have to kind of come to terms. They have to either buy less home or just kind of struggle with the payment a little bit, which I don't encourage them doing. But I do think we're still seeing contracts come in. Matter of fact, I mentioned before we went live that we have a new listing in the San Jose marketplace, a really cute 2-bedroom, 1-bath home in a nice area of San Jose, listed at $900,000. Went on the market on Thursday, and the next day, on Friday, we had an offer at $850,000, and my seller said, it's a little bit less than we're hoping for, and it happened too fast. Can we reject the offer? And my mindset is always to counter. It's a one-page document to submit a counter offer to a buyer, and they chose not to do that. They took some advice from their daughter who sold real estate 20 years ago in the Bay Area, but now got out of the business and moved to Michigan. I don't think she should be consulting on Bay Area real estate if she doesn't live here anymore and hasn't been active in it. So again, a lot of sellers, when they first go on the market, they have that thought they're still going to see these multiple offers, and until the reality sets in, that's when they say, I should have listened to him, that offer at $850. I should have countered it. I should have accepted it. What do we do now? Just pick up the pieces and keep moving forward.
So Tony, do you see any kind of panic in the real estate industry? I mean, among your peers, your fellow realtors, your friends, your network. I mean, are they seeing I mean, doom and gloom. I mean, some people believe that the local area, Bay Area housing go through a crash, 20 to 25% reduction moving forward, or what is the sentiment? What's going on?
You know, when I talk with newer agents that have been in the business for less than 10 years, you got in the business 10 years ago, I mean, everything you touched sold, and they got used to that. They got used to that momentum, and now, hey, my listing's been on the market for 3 weeks, nothing's going on. My house been on the market for 4 months and nothing is going on. Well, then that's price or condition. You have to work with it. Well, what do I tell our sellers? I said, well, and again, you know, I will tell you, in my experience, the past 10 years, my listings lasted 1 week on the market just because I wanted to have that open house cycle. But now they're lasting multiple weeks. So every week, if my sellers are local, I get right in front of them and show them what's going on. Again, I only look at regionally, the zip code specific when I'm meeting with my sellers. I don't talk about national stats because it varies a market on its own. But I meet with them face to face once a week, and that's what we need to do in this market. We need to communicate with our sellers that, you know, you have a great product. Just right now, the pricing isn't there. You have to reflect, you know, it's the buyers that set prices up or down, and if they're not coming in with offers, that means we're too high. Or we can offer an interest rate buy down, which is pretty costly to a seller, but it gets the job done. That's where I'm at today.
Yeah. So Tony, I'm going to ask you a couple of questions as we're almost concluding this presentation. So, are you an optimist or you're a pessimist? And also, I mean, you know, people have different beliefs, right? And some people say, oh, home buyer need should stay on the sideline until things get better, until they can time the market a year from now, 6 months from now. So continue renting, and hopefully the price will drop 20-30%. Then you scoop in and buy a you know, fixer-upper or foreclosure. Then you have other school of thought. Hey, look, real estate is long term. So if you can afford the higher interest rate, if you have a proper down payment, if you have a good emergency funds, if you have a stable job, by all means, right now is never a wrong time to buy a house. So where do you stand in terms of as we conclude this presentation? What are your?
I'm always optimistic. We have to be. We have to be the cheerleader to our buyers and our sellers. And again, based on my experience, I see the trends up and down and all around. But at the end of the day, you hold on to your property for 10 or 15 years, it's a great investment. Less than that, I can't comment because real estate's always been a long-term hold. I'm optimistic that we're going to see sales next year. We're not going to see as many as we did in 2022, but we're still going to see buyers and sellers closing escrows. That's my opinion.
Very, very good. Okay, so as we conclude this video, so how can people find you? What is your email address, and what is your phone number, point of contact?
My cell phone number is 510-853-3849, and my email address is my name, tony.bruno@cbnorcal.com. Love to answer any questions you may have. I love what I do. I've never lost my passion for selling real estate, and I will continue to that until the day I say I've had enough, which isn't anytime soon because I love what I do.
I totally agree, Tony. And you and I have been friends for over 30 years. We are fitness workout buddy in Fremont for many, many years, and I'm still very close by at a different location now. So, yep. So thanks for the update, and I will. I will invite you back soon to go over another Bay Area housing update. So without further ado, thank you so much for your time. I know you're a very busy man doing very well, regardless of the economy and the market, whatever. So thank you so much, Mr. Tony Bruno. Thank you so much.
Thanks for having me on, Sue Wing. I really appreciate it.
Welcome. Bye-bye, everyone.
Bye-bye.